But for a lot of people who are looking to pull money out to reinvest in other types of assets, or we've had a lot of clients who anticipate 1031 exchanging, can't get into the property in time. They end up getting stuck with this large capital gain.
What has been your biggest frustration with your capital gains in the 1031?
That's a good question. Eventually they're going to come due. I mean, I guess that's at some point they're going to come due, unless you 1031 exchange, and then die, then you get that step up in basis. But for a lot of people who are looking to pull money out to reinvest in other types of assets, or we've had a lot of clients who anticipate 1031 exchanging, can't get into the property in time. They end up getting stuck with this large capital gain. And that's usually when they reach out to us and say, hey, I've got these other buildings. Can you cost seg these other buildings to offset this capital gain?
Yeah, so that's another interesting tool that you can use with a cost seg, right? You can help to use it to offset some of those gains if you've taken constructive receipt because your 1031 fails or whatever. So you probably do have a lot of clients that are able to do that.
Yeah, we do. And so we're able to come in and kind of help them at the end. The nice thing is when you have that capital gain, even though we're doing the cost seg study, and I don't want to get too far into the weeds, but oftentimes the cost seg study will unlock the deduction up to the value of the capital gains. And for those who aren't real estate professionals, it oftentimes hits their W-2 income first before it offsets the capital gain. So you end up paying your capital gain, but you're offsetting your W-2 income by the amount of the capital gain when you do the cost seg study.
Gotcha. So it's just one tax savings here, not there. Yeah. So if you have a $100,000 tax liability because you have a W-2 job and you have a capital gain, well, you do a cost seg, you might not have any of W-2 ordinary income tax, but you're still going to have the capital gains tax.
Right, which is fine. I'd rather pay my capital gains at 20% than pay my W-2 at 35% or whatever bracket I may fall in.
So actually it hits your W-2 first before the capital gain.
Yes, typically.
So you're saving that, obviously your brackets, right, and your states and all that kind of stuff. But you're saving a significantly more amount, significantly higher amount in taxes because you're offsetting ordinary income, not just
the capital gain. Right. Yep. So the other thing we could do, another strategy we employ oftentimes is if you do have a capital gain, but you own other real estate, if you can use cost segregation to get your income down to zero or close to it, you now find yourself in a 0% capital gains bracket, and you don't pay capital gains on some of those transactions. So you can use cost segregation to get you out of that 20% capital gains bracket down into the 15. And we've even had a couple of cases we were able to get them down to zero, and they paid hardly any capital gains on the sell of that asset.
So this sounds like super awesome, right?